Hi everybody, Nick McDonald speaking. Welcome to this week's Trade with Precision free newsletter. Today, I want to take you through a common mistake I see traders making. Now, this is my opinion on what a common mistake is, but I also believe this is very objective, and you can watch and see what I say here and make your own mind up. But what I try to do with my trading, the way I teach it, the way we teach it at Trade with Precision, is to be very objective at all times. So there's a precise reason for trading, a precise and certainly not at all subjective reason for trading. Because if it's subjective, it means different people have different opinions and things can change and there can be very different views on something. The more subjective it becomes, and trading's already subjective enough as a topic, the more subjective it becomes, the more difficult it becomes to learn something precise that you can do over and over again, which is exactly what we try to teach. Our specialty is trading strategies, precise, objective, technical analysis rules, which when combined together form a powerful trading strategy. Let me take you through just one example of a technical analysis mistake that we see people making. Firstly, let me draw a trend line on this chart. So for example, I pick a high and I pick another high and I connect up the dots and I say, here is a trend line. This is now a resistance level, right? Actually, wrong. And the reason it's wrong is because it's subjective. I've just connected a couple of dots. Somebody else would have come and said, no, actually that's not the resistance line or the trend line. This is coming from that high down to that high, and we've got 3 touches on that one. That's better again. Somebody else though would say, hold on a second, what about this major trend you've got up here? We can get 3, even 4 touches on that. So that is the trend, that is the resistance line. I could draw multiple lines, right? I could go and draw as many as I wanted if I want to start connecting up highs and lows. Let's just draw another one in there for argument's sake. When we do this, right, the one thing that's wrong with it, the big problem with this, is that these lines are subjective. We can draw them in any different place like we've just seen. But also, it doesn't give you a precise point. We don't know where the trend is if we're going to use sloping trend lines. Because where is resistance? If these trend lines are resistance, then there's resistance here. Let's call this one line A. There's resistance at line A. Is it at line B? Is it line C? Or is it line D? Where is the trend broken? Is the trend broken when it changes, when it breaks up through A, B, C, or D? The answer is we don't know. And the other thing is these lines move. So let's say we were to enter short now as it broke that line, right? Or even if we were to buy as it broke up through that line. So we could enter short as it bounced off that line to go down, or we could even potentially, different strategy, enter long as it broke up through that line. Completely subjective strategy, and the reason is, A, we don't know which line to use, but B, the stop loss itself would have to be moving. Because if I want to enter a break of support, I want a stop loss that's protected. I can't move the stop loss. But because in this case, the reason for entering the trade is constantly moving and evolving, i.e. the line itself is constantly moving, therefore a stop loss will be constantly moving as well. Very subjective, very inaccurate, very difficult to pull off with any degree of consistency. So therefore, where is support and resistance? What is a support and resistance level? It is a flat level. We're looking for levels where the market has tested on multiple occasions and found support. So for example, here we've come down and we've bounced there or thereabouts. We've bounced precisely here, bounced more precisely here. We've got a level around 1215 where there's been good support and resistance. Actually, if we zoom out, the level is really 1200. If we come right back here, you can see lots of tests at 1200 in the past, lots of tests around that level now, bounced off it here, bounced off it here. 1200 is a good objective support level. It does not move. 1200 on gold, this is the gold chart by the way, it does not move. Let's have a look at another example of a level. So just even looking in here at, I'm just drawing in a line, I'm looking for recent touches with recent flat objective levels with multiple touches. Look here, we found support there once, we found support all through here, we found support there again, we found support there again, we even rejected it somewhat here. That's now a resistance level, that's above. So I've just found the most recent resistance level, which if price comes up above, there we know where resistance is, and that does not change. We've also found the most recent support level. We know where support is to the downside, and that does not change. It's far more objective once you know exactly what you're looking for, multiple touches at the same precise levels, and guess what? Those precise levels remain for years to come. They don't change like a sloping trend line, which is dynamic and changes constantly and therefore cannot possibly act as support and resistance. So there's one little lesson I just wanted to kind of go through with you. Been through that quite briefly on our courses and on even our free webinars. We talk about that in depth, talk about it for a lot longer, go through it in much more detail. So that's kind of an introduction to it. I just want to show you a webinar that we have taking place tonight. It's called the Top Ingredients for Successful Trading. And if I just, so when I say tonight, that's there's people in all sorts of different time zones. So I'll show you the time zones in a moment. But this is the webinar, Top Ingredients for Successful Trading. And one of the things we go through here is support and resistance. And I'll just show you a few of the slides. We talk here about sloping trend lines and how they're subjective. We show some examples of how subjective they are, and then go through, perhaps more importantly, and show you what true support is, flat levels, and how we go about using it. Also what true resistance is, which is flat levels, how we go about using it, and also how therefore support becomes resistance with a line that does not move. We're still looking to trade with a trend, but we're using lower highs and lower lows for a downtrend, higher highs and higher lows for an uptrend, and that's what tells us when the trend has changed, as compared to a sloping trend line, which doesn't really tell us, to be honest, anything at all. Hope that helps, ladies and gents. If you'd like to attend our webinars, please just visit our website, tradewithprecision.com/free webinars, or you can just visit tradewithprecision.com and just simply click on the banner here, free live webinars. And what you'll then see is the next webinar up. It's in 11 hours from when I speak. That is taking place at 7 AM London, 6 PM Sydney, 8 PM Auckland. That's the Top Ingredients for Successful Trading webinar, the one where we'll go into more detail on the topic of this free newsletter with sloping trend lines and support and resistance levels. You can register for that one, and in case you'd like to register for our other webinar this week as well, Trading Strategy Precision Style, that's where we take things like support and resistance, but combine that as well as other ingredients together into a trading strategy. And we teach a trading strategy on the second webinar this week, and that one takes place Wednesday, 18th of December, 3 PM New York, 8 PM London, 7 AM Sydney, or 9 AM Auckland, both next day. So you can visit that site and visit that page and register for those webinars. And I really look forward to seeing you there. We do, by the way, have a Christmas special going on right now, which we've never offered before, and it's only available to webinar attendees. So if you've been monitoring Trade with Precision for a while and contemplating taking one or more of our courses, then we do have some promotions going on. Given that it's Christmas, this will be your last chance this week to join the webinars and take up those offers before Christmas. So if you're interested at all, please do join us, and we look forward to speaking with you on the webinars. Happy trading all, and Merry Christmas if I don't speak to you sooner. Have a fantastic Christmas, Happy New Year, and some of you we shall speak to on the webinars this week. Thank you very much, and happy trading.